All right, and India's GST Council has approved sweeping tax changes that will impact both households and industries. As I mentioned, essentials such as groceries, medicines, personal care items, and even cement in small cars will now cost less. At the same time, the council has raised levies on sin goods like tobacco and fizzy drinks, and on luxury products such as SUVs, yachts, and private aircraft. On the consumer side, several daily essentials are now tax-free or taxed at just 5%. These include milk, paneer, paranthas, roti, dry fruit like almonds and cashews, personal care items such as shampoo, soap, hair oil, all of these have been included as well. Toothpaste and shaving products also see tax rates drop to 5%. In healthcare, critical life-saving drugs are fully exempt, while most medicines, devices and oxygen equipment and these will attract about 5% GST as well. On the industrial and housing front, cement has moved to 18%, while tractors, bicycles, small cars, electric and hybrid vehicles, ambulances will now come under these levies. On the other hand, the council has sharply raised taxes on products considered harmful or luxury-oriented. Pan masala, chewing tobacco, cigarettes will now face 40% GST. The same 40% rate will apply to carbonated soft drinks and energy beverages as well. Large cars, SUVs with bigger engines, high-end motorcycles, yachts, private aircraft, even revolvers are also in this 40% bracket. Additionally, coal and peat move up from 5 to 18%, biodiesel not blended with diesel rises to 18%, and premium apparel and textiles priced at above 2,500 rupees per piece will now attract higher levies. All right, to discuss this further, we're now being joined live by Subhash Chandra Garg, former Finance Secretary of India, live from New Delhi. Thank you so much for joining us on World Business Watch.
Thank you.
All right, so how do you think this tax makeover benefits the common man?
I think there are three very powerful messages from what the GST rejig had been done yesterday. They affect the common man, especially the middle class. So, number one, the government has carried out significant reforms in the GST structure. From 5 rates, not 4, the rates now are 3. We have 5%, 18%, and 40%. Earlier, 28% plus the GST cess made the 5th rate. That's quite significant. It also, in the process, corrects many of the distortions in the GST structure, like inverted duty structure, classification disputes between similar kind of products and all. So that's, I think, a big positive. And to my mind, considering India's situation as it is, this 3-rate structure is something which will stay for very long. It's not going to get down to 2%, 2 rates or 1 rate anytime in next decades or so. I think that having been arrived at is a good one. Whether the 5, 18 and 40% is an ideal tax structure, I don't think that's the case. They perhaps will need to move to 10, 20 and 40% some point in time, but that's in the future. So a lot of GST reforms which are in progress from 2017, so a lot of ground has been covered. Only a small ground is left. So that's one. Second, the primary motivation for the GST rejig is actually a populist agenda. You see across the board, the rates have been reduced. Higher rated goods have been brought into the lower ones or taken to the zero rated kind of things. The products which are consumed by masses, the products which are consumed or purchased by the middle class, all of them have been brought into the lower incidence. The idea is simply to sort of please these classes, which you may see some connection with incoming Bihar elections and all. So this is a very populist kind of agenda. The reform is only for the rates, and that affects the businesses and the industries. The cuts actually benefit the people. That's what the real objective of the reform is. And the third one is, to my mind, there is a wrong calculation of what the fiscal impact of it would be. In my judgment, it will be about 1.5 lakh crore plus. Why I say so? See, the GST cess, which yields about 1.25 crores every year, is now going out from 22nd September for most of the goods. For pan masala, etc., most likely by 30th of November, or at the most, as Finance Minister said, by 31st of December. And the higher rate on the super luxury and these kind of goods which has been imposed, it seems that the Revenue Department has estimated that this will yield about 45,000 crores of extra tax. So 1.25 lakh crores minus 45,000 crores, I think there is a clear loss of 80,000 crores on the cess front. Revenue Secretary calculated 93,000 crores based on 23-24 consumption as the loss. That is going to be another 1 lakh crore plus. So taken these two together, I think the loss would be 1.5 to 2 lakh crores. That is a gross underestimation to my mind. I think these are the three big messages coming out from the rejig yesterday.
All right, sir. Thank you so much for pointing that out. And just if you've pretty much summed it up for us, sir, but if I were just to seek more clarity on this, if you were to talk about the key implications of this tax overhaul on India's economic growth, considering the geopolitical uncertainty that we face at this time, what's your take on that, sir?
So, economic reforms, or impact on the growth, we judge in two ways. What is the impact on the growth, and what is the impact on the government finances? So in terms of economic growth, you see, most items where the rates have been reduced are the common mass consumption, essential kind of goods. That consumption is not dependent upon whether you charge them 5% or 0% or 12%. That is not going to give a big boost on the consumption side. The real consumption boost or the growth boost will come from what the middle class consumes. So air conditioners, purifiers, cars, and the tractors and things like that. That is where I think there would be reasonably good boost. How much it will be depending upon a lot of other factors in the economy, the income trends, the overall GDP growth, exports and other things. But one can assume that there would definitely be about 10% to 15% jump in the value-added portion of the goods which goes to the middle class. On the whole, I think taken together, roughly about 0.2% or 0.3% at best is the GDP implications for the year. I hope it turns out, but this will be balanced by or counterbalanced by what the hit the government is going to receive on the tax front. Roughly about 1 lakh crore or so would be the hit on the central government finances, which will create problems in terms of the bond yields and all. There is already an increase, and I think there would be further increase in the bond yields, which also affect the economy and the middle class in terms of the consumption as well as the purchase. So on the whole, I think slightly positive, but not hugely positive as far as the growth is concerned.
All right, sir. Thank you so much for joining us on World Business Watch with your insights on this. Of course, how this unfolds, that's something that remains to be seen. We'd love to have you on back for more discussions on this. Thank you so much for this.
Thank you.